Good morning, everyone. It's 9:30. Welcome to SACS Forum. We're so glad you're here today. My name is Julie Hong from the Financial Accountability Information Services, and together with the Fiscal Oversight Team, we will be sharing various accounting updates and financial reporting with you today. Before we begin, let's go over some housekeeping items. If you have questions, please use the Q&A icon located at the bottom of your screen. If you would like to unmute and provide verbal and as always, you may send your question to sacsinfo@cde.ca.gov. We welcome your questions. The presentation slides, documents, and associated links for today's meetings were emailed to the SACS Forum listserv this morning. They are also available in the resource icon at the bottom of your screen that looks like a few pages. If you can see the icon, can you please give me a thumbs up? Thank you. Thank you. Awesome. Thank you so much. Perfect. Just a friendly reminder, this meeting is being recorded. Prior meeting minutes and recordings are available on the CTE Recap or SACS Forum meeting webpage. On to announcement and information. School district were adjusted by 0.259% to $114,800. The liability limit of parents and guardian for willful pupil misconduct was adjusted also to 0.259% to $25,100. Both thresholds were updated on December 6, 2024. Letters were posted on the CDE webpage under Finance and Grants and Accounting and Correspondence. Now, Eric will present on the updates on indirect cost rate.
Okay. Thanks, Julie. Hello, everyone. This is Derek. So I just have a couple of things to cover real quickly today. So the first is the approved indirect cost rates for the upcoming 2025-26 fiscal year have been posted on CDE's indirect cost rate webpage. And you'll find a link at the bottom of the slide. So I believe it's the last page of the slides. You'll find a link that'll take you to the webpage. Okay, so the second thing, the next slide. Okay, so the next slide, in this morning's email, there should have been a separate document that kind of lists all of our the code and reporting issues that we observed during our review of the 2023-24 UA data review. So we strongly suggest that whenever you have some time in a couple of weeks or months when you start working on your 24-25 unaudited actual report, that it might be helpful to refer to this document. But there is one kind of new item that we wanted to point out. So I'm not sure if I could share my screen, but if you're able to open up that separate document that you received this morning. Yeah, so hold on just a second. So the item that I wanted to point out, it's on page 7. Okay, and it's the second item from the top. Okay, and that's AB 218, Assembly Bill 218. And that is the California Child Victims Act. And I believe this bill went into effect January 1st, 2020. And one of the changes that it enacted was that it extended the statute of limitations period for individuals to file civil lawsuits for childhood assaults. That's not the exact language. So if you're unfamiliar with AB 218, I suggest you Google it. Also, I think it'd probably be good to point out too that I think earlier this year, January this year, the FITMAT team, which is the Fiscal Crisis Management Analysis Team, came out with a report kind of covering some of the potential fiscal implications for LEA. So if you're unfamiliar with 218, also suggest that you kind of use that as a resource as well. So one thing we wanted to put out was like during our review of the ICR calculation, and this was an issue I think we first saw 2 years ago, maybe 3 years ago, where we found the district was charging its expenditures related to AB 218 incorrectly to the indirect cost pool. Either they were charging it to function 7200, which is other general administration, or they maybe charging it to function 7400, which is like the personnel human resources um, function. And like in the years since then, it seems like we've been getting like one or two more districts that are incorrectly charging it. So that's why we wanted to point out today. So if you're generally familiar with the indirect cost process, how it works, everything, you'll know that a percentage of the LEA's indirect costs, that is LEA's agency-wide administrative costs, are charged to both federal restricted programs as well as some state restricted programs. And with the rationale being that these federal and state restricted programs benefit from the LEA's general administrative activities, or another way to put it, they rely on these services from the LEA in order to operate effectively. So by including costs related to AB 218, either settlement claims or council fees, by charging these costs to the indirect cost pool, we're like in a sense forcing these restricted programs to pay for a share of costs that they derive no benefit from. So that's why we said that the most appropriate function code for these costs should be function 7100, the board and superintendent, which would then be captured in the base cost of the calculation rather than the indirect cost pool. So in as far as reference, the letter that we referenced, that letter can also be found on our ICR webpage. So if you were to look at that letter, there's a section in there titled legal costs. And I think the wording in there is somewhat to the effect that legal costs related to agency-wide issues are more appropriately coded to function 7100, and that's kind of how we see these costs. I mean, also in that same paragraph, you also see additional language saying that legal issues related to like personnel matters may be charged to function 7200, which is the indirect cost pool. But as far as that, we interpret that as being like former employees, filing lawsuits against the LEA, which is totally unrelated to this. So that's the only thing I wanted to point out. So if you have any questions, you can shoot us an email to SACS-info and we'll respond. And that's all I have. And I think next up will be Marsha.
Derek, I think that Jamie has a question, has his hand raised.
We pay 80 costs out of Fund 67, so function 7100 is not possible.
Yeah.
I think function. I'm not sure. Let's see. I'm not sure if function. I'm not really sure if Fund 67 67 is actually included in the indirect cost rate calculation, so it may not, so it probably doesn't matter. Um, I'll look into it, and if and type type an answer if I'm wrong.
All right. I'll mention a couple of unaudited actuals observations that I was working on, and those have to do with revenues recorded for specific programs. And a couple of specific examples, the Extended Learning Opportunities Program. We've noticed when we were running the statewide data that there were some, for example, high school districts that were recording revenue in this program. While this is really only, I think the eligibility is based on elementary grades, average daily attendance. So we wouldn't expect to see the revenues for those districts to be recorded in Resource 2600. Another example of the statewide data that we were running is the Learning Recovery Emergency Block Grant. And just for your information, for example, this particular program is tied to a litigation that the department is involved in. So there is periodic data requests for fund balances in that program. And we've did compare the revenues recorded to the information that we have on our website about apportionments made for that program. And we found some mismatched amounts, but also there were a couple of rather large LEAs that didn't record any revenue. So that also was an alarm for us. So this is just a mention to everybody to be cautious and carefully and accurately record the revenues, because we do use the information for various statewide reports, legislative requests, etc. Are there any questions on that? Then we encourage you to review the document that we prepared because it is lengthy. It covers both the regular SACS submittals as well as charter alternative form. And at this time, I'll pass it on to Hillary for the next update.
Thanks, Masha. Next slide, please. Thank you. So I'm here to share a little bit about the Every Student Succeeds Act, or ESSA, per pupil expenditure reporting. So ESSA PPE. So our collection ended on March 17th, and thank you so much for all the timely submissions. We noticed that the quality of the submissions we received this year was very high, much higher than in past years. So greatly appreciated. It creates a lot less work for us and a lot less work for you too. We are currently reviewing submissions for some discrepancies, and we're reaching out to the LEAs for corrections, and we do anticipate the correction process to be fully completed by May 30th. The final data is anticipated to be released to the field by the end of June. And if you have any questions, please feel free to reach out to me via the ESSA PPE mailbox. So that's ESSAPPE@cde.ca.gov. Thank you so much. And I believe Rigo is next to share some updates about SLFS.
Thank you, Hillary. So updates for the school level finance survey. So collection of instruction related expenditures for fiscal year 23-24 data ended March 17th, 2025. So it had the same deadline as the SLPPE survey. And for the SLFS, we had approximately 90% of all LEAs reporting expenditure data for their schools. So we greatly appreciate that. Currently, the CDE is performing quality checks of the data received and is contacting LEAs if discrepancies are identified. Data is anticipated to be provided to the Census Bureau and to the National Center of Education Statistics by June 2025. It is anticipated for fiscal year 24-25 data collection to occur between December 2025 to March 2026. As a reminder, fiscal year 24-25 data collection will collect instruction, student support services, instructional staff support, as well as 3 exhibits: salaries paid to teachers, salaries paid to instructional staff or assistants, and books and periodicals. Additional information about this upcoming collection can be found by visiting the SLFS reporting webpage and navigating to the Calculating SLFS data section. So now we'll pause to see if there's any questions. I see no questions. Julie, do you see any questions in the Q&A regarding SLFS?
No, not on SLSF.
Okay, great. Okay, so next we'll have Masha.
Thank you. Mine is just a short update on the standardized account code structures web system. It was updated on May 1st to provide budget reporting functionality for 25-26 fiscal year. The next thing that we're working on is the 24-25 unaudited actuals release, and we're hoping to have that available in early July. Any questions for SACS Web specifically? All right, and we can also take questions in the Q&A and later on in the at the end of the presentation. So I will pass it back to Rigo, and we will start with our section on accounting updates. Thank you.
Thank you, Masha. So next slide, Julie.
Sorry, my internet went down for a second.
Okay, that's fine. Let's
Are we on 25-20 budget release?
no, we're currently in the CY BHI slide.
Okay, sorry about that.
That's okay.
Here you go. Can you see the slide okay?
No.
Cannot.
Julie, while you're pulling that up, there was a question that came into the chat, and I will just respond to that while we're waiting for your screen to come up. Oh, it's up, but let me just mention real quick. There was a question about announcements about the budget release and the SACS web system. So the last release that we had in October was the interim release. We did have some issues with the automated emails that come from the system. We had not fully resolved those issues, so we had a little bit of the same trouble this time. And so the extent of it was that some users, some SACS web users didn't receive an email and others received it multiple times. So we're working with the developers to fix that for our next release. The information that you would have gotten in an email is posted on our webpage, on the SACS webpage, under the letter that went out to the superintendents. It's essentially the same information announcing the release. Within the system itself, there's also a dashboard announcement that hyperlinks to the what's new. So the information is available, and we are working on fixing our email communication from the systems to make sure that during unaudited actuals, all the SACS web users do get that automated email. Thank you. Now on to Rico.
Great. Thank you, Masha. So next we have the California Youth Behavioral Health Initiative, the CYBHI fee schedule program. And before we start with this slide, I would like to remind people that the CYBHI program has many elements to it and different programs associated with it. So for this guidance, we're specifically referring to the fee schedule program. So with that, so the fee schedule program aims to reimburse LEAs for behavioral health insurance for behavioral health services provided. Reimbursement is made to LEAs by Medi-Cal managed care plans, known as MCPs, medical fee for services, known as FFS, commercial health plans, and at times by disability insurers. LEAs have inquired how they should record the receipt of these reimbursement amounts. The CDE had conversations with the California Department of Healthcare Services, known as DHCS, and we have confirmed that the CYBHI fee schedule program, because it is 100% managed care plans or disability insurers funded, and although the operational goal of the program is to fund costs associated with providing behavioral health services to students, those reimbursement funds can also be used for other activities. Therefore, the CDE recommends recording the reimbursement of these funds received from the CYBHI fee schedule program using resource code 0000, which is unrestricted, and object code 8699, which is known as all other local revenue. So now we'll pause for a few seconds for any questions. I'm not seeing any questions. Julia, you seeing any in the Q&A?
No, there's no
No.
questions on this topic.
Okay,
Thanks,
great.
Nicole.
So now I'll pass on to Jody, and she will be discussing resource codes updates. Oh, I'm sorry. I do have one more slide. So that is my next slide is the AB 3216, the Phone Free School Act. And with that, so Assembly Bill 3216, Chapter 500 Statutes of 2024, known as the Phone Free Schools Act, was enacted in September 2024. The Act amended Education Code Section 48901.7. In summary, the Act requires a governing body of a school district, a county office of education, or a charter school no later than July 1st, 2026, to develop and adopt and update every 5 years a policy to limit or prohibit the use of smartphone by pupils while they are at a school site. LEAs are encouraged to review the California School Accounting Manual, CSAM, Procedures 405, known as the Accounting for Inventories, and Procedure 770, that's distinguishing between supplies and equipment, if they purchase supplies, equipment, or capital assets to implement this policy. Additionally, as expenditures can be directly identified with a classroom, Function 1000 may be appropriate to use. LEAs are encouraged to review CSAM Procedure 320, goal classification, when coding the appropriate goal for the instructional setting. Now we'll pause for any questions.
Rico, there's a Q&A question for your last slide. Is using a 9010 resource, is that okay?
For if they're using resource code, say that again, I'm sorry.
The resource 9010, would that be okay? Regarding your last slide on the CYBHI.
Let me research that, and I will answer in the Q&A.
Okay, perfect. Thanks.
Okay, good morning. This is Jody. I'm going to give just a little review of resource codes and a couple reminders. So it's kind of late in the fiscal year. We don't have any new resource codes to discuss. In fact, our last validation table in December of 24, we didn't have any new resource codes at that time either. We did put a couple end dates on, resource 7338 for the college readiness block grant and 7428 for the county's Safe Schools for All are all effective through June 30th, 2025. And 7412 and 7413 for the A through G Access and Learning Loss Mitigation Grant will end on June 30th, 2026. A complete list of resource codes that are ending June 30th, 2025
and June 30th, 2026 was mailed in the handouts this morning and is also available in the resource icon. And just keep in mind, if LEAs do have balances in any of the ending resource codes, as long as program allows, you can still spend down those balances even if the resource code is ended. You will receive a technical review check in SACS, but the TRC will be warning and an explanation can be entered. So you can still do your official exports. And just a reminder that our office maintains the codes and we give accounting guidance on them, but for any program, eligible expenditures or expenditure periods, you will need to contact the program contacts. And a good source to find that information is the SACS query, and it's available on CDE's standardized account code structure webpage. And in the query, you will be able to see indirect cost rate information, ending fund balance versus unearned revenue, as well as the program contacts, fiscal contacts, and those are the people who you would want to contact for program-specific questions. Also in the SACS query, if a resource code is ending, you will see a single year reference. For instance, 7338 in SACS query has a end date of 2024. And so there's been a little bit of confusion on what that end date actually means. So an end date of 2024 means the resource code is valid through fiscal year 24-25. So that means July 1, 2025, you will begin getting your ATRC for that resource. So another example, an end year of 2025 means that is still available for fiscal year 25-26 and will no longer be valid for fiscal year 26-27. So again, just remember, we maintain the codes and any program related questions are best asked at the program level. And I think that is all I have, unless anyone has questions on resource codes. So let's see. Okay, I see that resource 6512 will no longer be active beginning July 1. I'm aware that some LEAs may be holding fund balances for out-year qualifying NPS and other educationally related mental health costs for students with disabilities. Can they continue to retain the balances in 6512? Oh, I think Blanche is typing an answer for you, so I'll let her address that one. Oh, and Eddie said disregard anyway, I'm sorry. You have until 6/30/2026 to spend down 7412 and 7413. Okay, I'll have to look into that, Becky. I don't recall having an end date of 2027, but it could have been. But LEAs have until June 30th, 2026 to spend down the A through G grants. And I think that's it for resource codes. We will be addressing questions on other topics at the end in the Q&A to keep the webinar going. And I am done. And so I will pass that on to Agnes for GASB 104. Thank you.
Thank you, Jody. This is Agnes. Before I'm going to start talking about the new GASB Statement 104, and I did see some questions. I would like to answer just one question, with regarding, I think, somebody asking about for the CYBHI side. And I understand, this particular, person asking because currently we use, resource 9010 for the LEA billing options program. And that is true because, for that one is same thing, several years ago, we communicated with DCHS, health services, because what happened is those reimbursement money coming back from the federal, actually the state, we put the restriction onto how to spend those money. That's why, resource code 9010 is appropriate one to record those reimbursement. However, for that CYBHI fee schedule program money, is different from that one, because that one is through the communication with the DCHS and the health services, because for that one, there's really no state imposed restriction how to use it. That's why we recommended resource 000 for that purpose. Okay.
Thank you,
And
Agnes.
yeah, because now I answered that particular question because personally I work on that LEA billing option program. That's why I know why we recommend using resource 9010, and then why is it different from this particular one, the CYBHI, why we recommend using unrestricted resource. So then I can moving on for my topic, today. Today I'm talking about is the new statement, from the Governmental Accounting Standing Board, the GASB. The GASB issued a new statement number 104, and it's called the Disclosure of Certain Capital Assets, and that will be effective for fiscal year 2025-26. And this statement basically is really affecting the governmental-wide financial statements, that there are two new required disclosure of capital assets with, included in the note, to the financial statements. And those two new required disclosure are that, first, certain type of capital assets must be separately shown in the capital assets note disclosure. And secondly, there will be a separate note disclosure of capital assets held for sale. Next slide. And for those, the first bullet, in the previous slide, talk about certain capital assets, they have a separately disclosure show. The first one with the leased assets, GASB 87, they have this specially show as a leased assets, also at the same time breaking out by the major class of the underlying assets. And the second one is the intangible rights to use assets, recognizing according to the GASB 94. Also, same time, they need to be shown by major class of the underlying assets. And number three is the subscription assets, by the GASB 96. But we know that this one, they need to be separately shown, on the capital assets, this note disclosures, but they don't need to be breaking out by the major class of the underlying assets. And for the other rest is really called the intangible capital assets, wherever it's not for those above three types, then those also need to be shown, listed by major class, different types. Next. And in addition to that, the second new one is really called, a new separate note disclosures for the capital assets held for sale. And, with this new statement, they do, talking about is what kind of criteria you can determine what type of capital assets held for sale need to be listed, separately. First is the government has decided they're going to pursue the sale. And second is it probable that the sale will be finalized within 1 year of the financial statement date. And, definitely, this one, they say the evaluation for the capital assets held for sale has to be evaluated each reporting period. Next. And, for that, particularly, separate, note disclosures for the capital assets held for sale, within that note, the government LEA need to disclose the ending balance with a separate disclosure, the historical cost and accumulated depreciation. And also at the same time, if there's really any debt related with this capital assets, then you also have to be, disclosed separately with the carrying amount of the debt. And that's all I have, for the GASB 104. Are there any questions for this particular statement? And I don't see any questions. Then I'm going to pass on to Emmanuel, and he's going to talk about the SACS web system resources.
Thank you, Agnes. Hello. Okay, I just have some SACS Web tips and reminders for everybody this morning. Within the SACS Web system, you can use the administration role to unlock locked dataset submissions by selecting the Display Current Locks button and selecting the Unlock All button. Here we have a screenshot of that. Another tip, in the View Users page, you can select Associated Users option to filter the results. This will give you a more dynamic view of just those associated to your LEA. Next slide, please. We have some publishing reminders as we're getting ready to publish the next reporting period. The 2024-25 second interim reporting period data will be published next. We ask the County Offices of Education to finalize and promote all publishable data sets to the LEA Oversight Review completed state. In addition, CDE recommends that COEs update their internal procedures to include a reminder for promoting all submissions to a publishable state for future budget and interim reporting periods. And thank you for everybody that has promoted their data sets to the final publishable state. Any questions? Okay, and then back to Julie. Thank you.
Okay, there are questions in the Q&A. Rico, I think a lot of them are about the CBHIY, if you want to respond.
Hey, Jody. Yes, I'm reviewing them right now. I'm trying to answer. I answered some of them already, but some of these I still have to review and do further research. So if you could please, if I don't respond to your question, if you could please email sacsinfo@cde.ca.gov, and that way I'll be able to provide you a direct response.
This is Agnes. Thank you, Rico. I see one question, coming back, asked about can they really use the resource in 9010 for the CYBHI? I just want to really clarify, for that because, for the resource code 9010, it's really called a locally restricted. And it's really according to the standard. When we say, restricted, has to be really imposed from the externally. So that's why, for this CYBHI, because technically, the states does not really impose any restriction how to use those funds. And that, also at the same time, we did confirm, with the health services. So we really truly believe, using resource code 000 is more appropriate than the resource code 9010. Versus, on the other hand, the resource 9010 is definitely more appropriate for the LEA billing option, because that one the state does put some external limitation how to use the fund. And then also same time, I see another questions coming in talking about the form assets to reflect the change, with the GASB 104. First, this will be effective for the 25, 26, and then, for this upcoming UA release is really for the 24, 25. So that's will be definitely really no change for that form assets. We are in the process, reviewing it. If it's really any changes is required, that will be included in the next year release for the 25, 26 UA release.
There any other questions?
Just to, I wanted to add to Agnes's response. We want to clarify once again that the guidance provided in today's SACS Forum is specifically for the fee schedule program. in our research, we understand that there's many components to it. There's the component of when the state provided the funds to certain COEs, county offices of education, and then that was distributed to different school districts. So that's one set of guidance. But then right now, specifically, we are just providing guidance on how to record those funds received after the services have been provided. And now the LEA is receiving those reimbursement funds.
Thank you, Rico. And again, if you have any questions that we were not able to answer this time because we need more research, feel free to send us to SACS info. So Rico and our team have a chance to research and get back to you. And if you have any questions after this presentation that you could think of, feel free also to send us SACS info email. That would be great. And we appreciate your time today and joining us today. And for our next meeting, we will have our next meeting is scheduled to be on November 4th, 2025. We look forward to seeing you. And thank you for your time. And I apologize for the technical difficulty for a moment. For the internet went down. So thank you so much for joining us. We really appreciate you. Hope to see you again on November 4th. Thank you. Oh, thank you, everybody. We appreciate the love and the applause. We appreciate it. Thank you very much.